Good morning, everyone. How's everybody doing? Aloha, Dano, Cisco. Where's Spam? We've got the three Hawaiians. Lodigan, well, how you doing, brother? Marsa Goals, welcome. Good morning. Good morning. Hey, Jerry, what's going on, man? How you doing? Good to see you. Welcome, everyone. And we got a situation. Yeah, we have a situation. You want to go back to the scene of the crime? The scene of the crime was, we had a gap down on Sunday night. We did a look below and fail of 67.88 and three quarter. Yeah, feeling much better, Jerry. Thank you. And then in RTH, we just had this ripper. As soon as we took out this high here, that's where the chaos started. Everyone was fine shorting this area because there was inventory. As soon as we took out that 68.88, 68.90 level, so we've got 1, 2, 3, 4. You've got 4 very, very visible short positions. Thanks, brother. Have a good rest. Got to get sleep. No good trading with one eye open. Oh, the ledge. Yes, the ledge. So we have 4 short positions in this market. And so everyone's kind of screwed up. Nobody really knows why, right? The way I'm trading, you need large size? Good God, no. No, 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 no. Hey, Indy, you don't need large size. I teach people how to trade using those funded trader accounts, right? Yes, please give me a call, Jerry. Look forward to hearing from you. It's been a while. Just let me know. So, Indy, yeah, if you sign up, um, definitely you do not need big size. I trade, what I do is I teach people to trade using 2 to 3 micros, right? You don't need a big account for that. And you shouldn't use your own money anyway when you first start trading, right? When you first start trading, you want to use those funded trader accounts. Now, I know everybody says they're a pain and you got to follow rules, but guess what? In finance, there are rules, and it's good that you get some discipline early. So you use those funded trader accounts, right? Because worst case scenario, if you don't do well, you can reset the account. Now, we don't want you to treat it like a video game, but the thing is, we want you to be able to learn how to trade in a safe environment. And that's basically like trading with training wheels, right? Because you got rules, someone's holding you, you can't get into too much trouble. And you do that, and once you start getting payouts, some people take those payouts and trade. Um, oh, I'll teach you how to be consistent. That's no problem. Consistency, lack of consistency is just a lack of understanding of how the business works and when you should be trading. We can fix that. Not a problem. Right? As my old buddy Addy would say, don't worry, we fix, we fix. Okay, overnight inventory. I've been warning about this since 5 o'clock. Overnight inventory is short. Now, I know everyone's looking for this short, but we got 4 stacks of bidders who are buying every time we get close to that low here. And that's exactly what happened. I took a little trade. I went long 22 and I sold 23 and three quarters. I had no idea that. Now do you see, Matt? You see? You see that? That poor low was like a flashing red light that we should be going long. Oh, you're at Heathrow. Cool. Oh, you're in UK? Oh, that's cool. Well, we're on the same time zone, Indy, so that's good. I'm in the glorious city of Liverpool, the best city in the UK. Got to say that every time just to get Raj going. 22 to 26, nice. Come on, Raj. You know you want to live in Liverpool, right? Best city in the UK. I'm Canadian. I know I sound American because I've spent 30 years speaking to Americans on phones doing trades, so I sound like an American. But I am a Canuck. I'm a Canucklehead. And I ended up coming to the UK about 4 years ago. That's okay, don't worry. I still love my Americans, even though everyone's pissed at them. I love my Americans. They've always looked after me, right? They're just going through some growing pains. That's all. So we've got sellers up here. There's a standard deviation up here at 27, right? Nice. No, I wish, Matt. I wish. No, I my girlfriend lived in the UK. I met her and I moved. Oh, you're in Derby. Okay, cool. Cool, cool, cool. Yeah, Raj is in London. I'm and then my girlfriend's a doctor, so she got a job in Liverpool, so we moved up here and man, I love it here. It's the best. I love me Scousers. Great folks up here. I really like it. It's a beautiful city, and the people are just amazing. They make you feel right at home right away. It's great. Now, the whole soccer thing, don't get me started on that because I don't know what the heck you guys are doing with the whole soccer thing. Bram just keeps calling out those. What's going on, Bram? Yeah, let's see. We're kind of stuck here. Now, we've had an inventory correction up because inventory was short, right? This is I was waiting for this, right? I was waiting to see J low, see, and that's the thing about market profile, right? The J low corrects inventory lower, finds the bid, and then moves up. That's pretty normal market action. Now at 18 minutes, London's going to open, and let's see if London brings in sellers or buyers. Now, my short selling friends, right? I love you to death, but be careful. Your warning sign as a short seller. If you are positioned short this overnight, both capital J and lowercase j correct inventory, Matt. How cool is that? In the RTH session, capital J corrects inventory. In the overnight session, lowercase j corrects inventory. Very cool stuff, right? So always look out for that inventory correction. My brain's coming back online after the last 2 weeks. So I'm going to do, hopefully, Thursday, like Wednesday, we're going to do an execution class. Thursday, how about we do a Devils in the Details class for traders who want a little bit more? You know, all those little subtle details that I see that people don't see because 34 years of experience. Let's go into that, right? See if it helps. I should move to London, AO. I lived in London for a year and I like London, but it's very, very cold. The other, like, I only had one friend in London. It was Raj. Here I get to talk to everybody. Nobody talks to anybody in London, right? It's a great city. It's just, it's great for if you're a loner or if you have a big family or something. All right, so we hit the sellers here at 27 and change. Now, we're going to be in distribution. There you go. Thanks, AO. Right? We're taking this cheap stuff and we're going to sell it here. We have sellers here, so that kind of caps the sales, right? That's the problem. So we are in distribution. Let's see if we can stay above VWAP, right? So if you guys are up for it, we'll do that on Thursday, right? Tomorrow we'll do an execution class at 11 a.m. Those of you who join the room, uh, please join us for that. And what else? Oh, sorry. Thursday, devil's in the details. Right? What are the details that we need to look for when trading? It's the subtle little things like that little poor low. That when I saw that poor low holding, and then I saw this K period open, man, I knew, right? Why haven't you traded any tinies yet? Oh, I took a trade here. If you're just joining us late, New Jazz Perspective, I already took a trade before the class started, but it was just one micro, so it wasn't really anything. And then I missed this move. I took it from here to here, and then I missed this part. Yeah, it'll be recorded, Dave. So all our sessions in the room, and I got to put in a plug for the room. Yeah, yeah, no, I'm just getting going. New Jazz Perspective. I'm on my first cup of coffee, and to be frank, the girlfriend's given me a hell of a to-do list today. So I got to make sure that my brain is working properly before I actually trade any kind of size. So I only just took the one little trade. Exactly, exactly, right? Yeah, the micro is the best way to start the day, right? Remember the Folgers commercial? The best part of waking up is Folgers in your cup. Well, the best part of waking up and trading is the micro. Because you can trade the micro, see if your brain is working, see if you're seeing things properly. And, if things go bad, you lose 20 bucks, right? You know, it's the best way to go. I always start the day trading the micro, or as New Jazz Perspective says, tinies, right? It's the best. Now what are we doing? What are we doing? Back to VWAP. So we ran out of buyers at 26, 27. Go put it on sale. It's very slow tonight. Oh, the other thing is the bastards raised margin again, right? Hey, Tim. They raised margin. So margin is what the heck is it here? It's 600 bucks to trade a micro and 6 grand to trade a mini at AMP. So, yeah, it's a little bit more expensive than we normally pay for margin. And now see, the one thing that a lot of traders miss, you see these candles here? They look like a barcode, right, on a box of cornflakes. Very hard to trade that. The only way you can trade that is position trade it. And you don't want to position trade in the middle. You want to position trade at an edge or at this edge, but not in the middle. It is very difficult. PPI, PPI at 8:30 p.m. Okay, a.m. Sorry, 8:30 a.m. Sorry. Yeah, Jam said it right there. You missing the details is part of the learning process. Let's see, what's the coin of bitterness doing? 74,000, eh? Not bad. Almost near my cost average. Boy, this Bitcoin is a real soap opera, isn't it? Is this thing even moving? Did I lose internet? Oh, there's a print. See how slow the market is trading. If you ever want to see the speed of the market, just open up a time in sales. It's like a speedometer. So we trade, then stop, then trade, then stop. I think we're going to do this, Matt. See this right here? I think that's what's going to happen here. Unless London does a big push down. But, with four short positions underneath us, as they say in Saskatchewan, it's a real dog's breakfast trading this thing. And that's what happens, right? That's what happens when you get, um, you've got a huge short squeeze from yesterday. So like if you talk to any trader, right? Any trader say you go to a guy who's managing like I don't know 80 million, 100 million and you go, "Hey, would you put a long position together here?" They'd be like, what do you want, crack?" Right? So if you say, "How about a short position?" Yeah, maybe a small short position, but if it starts taking out yesterday's high and these upper stops and that overnight high, I'm gone. We are experts in trading distribution, trade maker. We are. And the biggest thing about trading distribution is knowing when not to trade it. Right? The biggest lesson in trading distribution is knowing when to step away. I mean, if you see candles that are like 3 ticks big, in a market where, you have 20.1 minute candles, now they're 3 ticks. Market's trying to tell you something. It's trying to say, "Hey, pendeo, business is slow." Right? It's like 7-Eleven. It's 3 o'clock in the morning. You got that one hot dog going around the thing. Looks like it's been there since 1972, right? Every once in a while, a drunk stumbles in and buys a pack of cigarettes. But there's really not much going on, right? And I think that's a lot what traders really lack that perspective, you know, to know when business is worth doing and when it's like, yeah, you should just kind of chill out a little bit. Yeah, when not to trade is the big thing. Let's see if London has any juice. Yeah, it's very easy to get stuck. The time point of control is 15 half-hour periods. I spent, 7.5 hours at 25 and a quarter, right? And the time and volume pointer control are aligned. So it's just telling you it's a very, very, very slow night. Those of you who are short, what you're doing is you're waiting for that low here, that J low to break. There's a stop here, you see? The end period low. That's your first sort of target if you are short. If it can break 19 and get into the single prints, then it's going to start filling those bids there. The only problem is, look at that price probe, right? This is a price probe in M period. Check this out from 6,900 and a half all the way up to 69.19. That's like a 20-point price probe at the end of the day. And they threw the market up here, which is another skyhook, right? And they're just distributing this 23 product back and forth here, right? Very, very difficult to trade because no size trader, unless, you know, they're out of their mind on drugs, is going to initiate a size position in this kind of a market, right? They're just not going to do it. Yeah. So you got to really, yeah, they need supply in those singles, right? So Tim, this area is just full of shorts who have buy orders in because they got trapped at the end of the day going into the last half hour of trading. M period open went down, everyone got trapped here. You can see the size and then rip, look there, they're shorting, look at the size. Shorting, shorting, shorting. Oh crap. Oh crap, oh crap, oh crap. Oh, let's short some more here. Maybe it'll go down. Oh crap, oh crap, oh crap. Let's lay it on here. Oh crap. Right? And look at them getting bought in here at 69.23. 12,000 contracts, 11,000, 10,000, 8,000, 10,000, 11,000. Right? That's all buy-ins, right? Yeah, that's why every time the market gets down here, Matt, every time we get down here, the software sees, oh, there's bids. Okay, let's walk them up. Right? So as soon as you go down there, pretend that this is a glass door. Right? Pretend this is a glass door and you can see all the people lined up outside with their money in their hand. Right? So what you do is you raise price, so you make them follow you all the way up to 27. And then you sell it back down. This is how you distribute size. Right? You distribute size by taking a market up and then selling it down. Because when you take a market up, a lot of people will put limit orders. So when you go back down, you fill all those limit orders. Does that make sense? So you cut supply. If the order flow exists, you cut supply, raise price, right? All the tire biters follow, and then you fill them. See? And that is how you distribute. That's why in penny stock days, we would take a stock from $3 up to like $30, $40 a share because we controlled all the supply, right? So you just cut the supply, jam the thing up, and then just sell the holy living crap out of it all the way down. So if you had a stock that you paid less than half a penny for and you distribute it at, even if you sell it all at $5, right? That's a lot of money. You don't need to sell it at 30. It doesn't matter because your cost basis on most stuff is 0.001 cent. You usually get like a million shares for $5,000. And then if you sell those million shares at an average of $3 to $5, it's not a bad return on $5,000, right? That's why I always say don't buy penny stocks. They give them to you for free. How do you force the price up? That's a little bit more expensive, Indy. See, my coaching, my private coaching is lifetime coaching is 3 grand for life, but learning how to trade markets and manipulate markets, that's 10 grand a week. But don't worry, you'll make you'll make 100, 200 grand a week. But you need to have a deal, right? You need to have a public company. There we go. Okay, we got London opening soon here. Yeah, distribution is that's the name of the game, right? I mean, even like look at the SpaceX, right? Okay, here. They're taking that company public to distribute shares, get people to buy it. Yeah, we're always selling, Indy. We're always selling, right? Remember, that's why the first thing that we teach you when you come into my trading room is inventory and cost basis, right? Because we got 4 ticks in London here. There's nothing going on. Inventory is the most important thing. He who has the lowest cost basis of their inventory has already won. So when you're buying a stock at $5, someone's selling it to you. They probably paid less than a nickel for it, right? Most of these funds, when they finance companies, if the stock's trading at $5, $10 a share, they're getting their stock at a 14-day discount, at a discount to 14-day VWAP of the lowest price that stock has ever traded. So that's why I like trading futures because there's no zero cost basis stock, right? When you're trading a penny stock, there's somebody like me who's got 1 million shares, 5 million shares, that they paid $1,500 for, and we're selling it at $3 a share. So we can sell it at 3, 2, 1. We don't care, right? Zero cost paper always finds the bid. That is one of the 10 commandments in finance. If you get your stock for free or near free, it doesn't matter what price you sell it at because it's pure profit. And the other thing is people say, well, what happens when you run out of stock? You just print more, right? That's another thing that retail investors don't understand. That's why they have companies that do nothing but go straight down. They open at $40, $50 a share. Next thing you know, 6 months later, they're trading at $3. And they can never get any higher because they keep putting stock into the float, like diluting it, right? They keep issuing themselves free stock and selling it, and that's why people can't get ahead. That's why you want to trade a futures product where there is no dilution. You have a much better chance of making money, right? And you're investing in companies, make sure you read their filings, right? Oh, look at that. See, inventory short. London had nowhere to go but up. Now we just hit our holy crap, that's our warning level at 31. 30 and a half, sorry, 30 and a quarter, 30 and a half. Thank goodness the sellers stepped in there, right? Thank goodness that 30 quarter seller stepped in there, right where that green line is where it says stop. Because if we had taken that out and taken out the overnight high, the shorts they would have been home fried. right? They would have just been fried. Now watch. If we can stay over yesterday's high, the shorts are in trouble. But if we start going back down underneath yesterday's high, whoops, see? Watch. Watch 27 and 3/4. Yeah, as soon as you stop selling, Tim, that's exactly it. Everybody goes, you know how people say, oh, they're defending price by buying? That's another thing that's completely incorrect, right? How you defend price is you stop selling. You stop selling at that price and you raise the price, like they're doing right now. This is what I'm scared of for my short selling friends. If you are short and we take out that overnight high, be careful. Be careful. The only thing that's saving your butt right now is that it's slow and that margins are higher, so you don't have as many tire biters taking the offer right now. Right? If margin was $50, we'd be at 33 right now. But margin's $500 for a micro, so it's holding a lot of people back. And that's the only thing. Watch the offer. We're getting close to that warning level again. Here we go. Tick, 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 tick. Right? This is the worst kind of price action because it's slow and it's creepy, and everybody thinks it's weak. Right? They thought it was weak at 26. They added to the short at 29. Now they're adding to it at 30. Once the market comes back in, if we can't break that previous day high in 27 and 3/4, the whole position is underneath us. Look. See, the position is here. See? If we take out that high, that's what's going to happen. Yeah, you never defend price by buying. You defend price by stopping the sell. Yeah, exactly, Raj. Here we are making a run for the border. There it is. Now, if we accept over 32, we're looking for 33 and 3/4. Oh boy. Here comes the pain. Oh, I got to clean up this chart. Rats. Okay, I'll do that after the session. Yeah. So much for the overhanging supply, eh, folks? Gee whiz. Look at that. Exactly. We got a new fresh set of shorts. Now let's see. Is this a stop run? Or are they actually going to come in and hold that bid? Let's see. There'll be trap shorts under 30 and under 28. So there should be some bids here and some bids here. So if you are short, that's where you'd be covering. Yeah, you know, the problem with people, they don't teach you guys how to short properly. You need to have a seller to short. I'll tell you a story. This is how we used to short in the old days, right? In the old days when you used to we used to ride our horses to work, right? So this is how we used to short. I'm working at one brokerage firm. My buddy, right, is working at another brokerage firm on the desk, right? All of a sudden my cell phone rings, right? And he goes, "Hey, XYZ stock. We got a 2 million share sellout. Click. Which means he's got an order to sell 2 million shares of this stock because the client didn't pay his bill and they've got to sell it. So we go in short, say the stock's $5, and he's got a 2 million share sell order. He lets us know before he starts selling. We go short 10, 20,000 shares. He knocks the price down, right, by 50 cents a buck, however strong the stock is. We cover, and then we buy drinks that night. That's how we used to short. We would never short a stock unless we knew there was a seller. Like, what's the point in shorting something unless you can identify a seller? If you think about it logically, it makes sense, right? But people continue shorting markets on the uptrend, on the uptrend, on the uptrend, and they keep getting blown apart. You only short when you know and you identify clearly that there's a seller. Now, you don't have that phone call now, but you do have when the offer is moving lower and lower and lower and lower, right? You know, you don't short unless you identify that there's a seller. What's the point? Right? What is the point? Everybody tries to short the front part of the move. Wait till it does this, and then the sellers are identified. Short this, then you got a place to put your stop, and you got a place to bid. Don't short the front end of the move. That's a fool's game. See you, Tim. Have a good one. You don't want to short the front end of the move. That's how they get you. Now what we're going to try and do is we're going to use those shorts that are trapped under 69.30, right? Pretend they're on their hands and knees and we're standing on their backs, and we're going to take this position and try and sell it up here. Right? That's what's going to happen now. And if we can hold that 69.30 bid, we can sell a couple of thousand contracts up here. The value area will shift higher, and that shows distribution. If we run out of buyers, we'll sell it back down to cost basis. This is a very simple business. It has been prostituted and overcomplicated so much over time that it's criminally overcomplicated. Right? They got people looking at 300 different indicators, right? All sorts of different. This is crossing over that. You know, when the wolf, howls twice, and the moon is full, then you buy this level. Come on, right? Just look for where the sellers are and where the buyers are. That's what people have been doing for thousands of years. Just do likewise. Keep it uncomplicated. All you really need, this stuff here is just a map of the city. This is the map of the neighborhood where we want to transact. That's all. That's the only reason. Otherwise, I could just trade off this. Right? You don't really even need anything. All you need is this. So say you were short 34. Your stop would be up here at the top of these candles, and you'd put some bids down here in the 32s and see if you could get any product. If you could get product at 32, you'd put some bids down here in the 29s. You know, it's just really simple, right? It's very simple. The only thing is you've got to do it a couple of thousand times to get good at it. And that's where people freak out, because it takes time to be in step with this. So here you could clearly see the sellers are here at 36, 35. They stop selling down here in the 31s, right? So you've got a little distribution balance going here, right? Just back and forth. See? No, Howard, that's not for you. You should even stop thinking about catching a move, right? You're not Tone Loc, right? No reason for you to bust a move, right? I don't know if you'll get that reference, right? See you, Dave. Have a good one, right? Don't worry about that move, Howard, right? You know now just to trade this back and forth between 31 and 36, and when it's in the middle, leave it alone, right? Don't let them get you all, excited, right? Where you become a tire biter, right? Like a dog chasing a car. You're just going to get run over. Don't worry about trying to catch the move. That's not for you. If you stop trying to catch the move, you'll be way more consistent, and you are more consistent now ever since you stopped trying to do that, right? You still there, Howard? You couldn't predict those green candles. There's no way you could predict them. So why even try? Why don't you trade what's in front of you, right? This way, you won't be chasing the market, right? So when the market comes down and does a look below and fail of 31 quarter, right? You buy a little bit here, you put your stop here, you sell some here, you sell some here, you sell some here. How difficult is that? Right? You're worried about this. This is where people who make 500 grand a month, this is where they're making money. You're trying to catch this. That's not a tradable event for you at this time. Once you have money, right? Right? Once you have like $1 million or something like that, you can build a position here and sell it into strength because inventory is short. But you can't afford, if you get stopped out here, you cannot afford that business expense. But you going long at 31 and a half and putting your stop at 31, you can afford that business expense. Does that make sense? Do you now understand why? Right? Because this business expense you can't afford. This business expense you can. So stick with what you can afford. This way, if you lose money, you're not losing that much. Here, if you lose money, that's where you're eating up a third of your account, half of your account, trying to chase this. Because that is a trade for someone who's got a 6 to 7 figure account. Because they can afford the business expense. Just like Walmart can afford to pay more in advertising than you can if you've got a small mom and pop store, right? It's economy of scale. You don't have the cash to afford that transaction, but you have the cash to make money here. So focus on where you can make money instead of this stuff, right? This is a pipe dream. This is real business, right? Keep that in mind. It'll really help. Always ask yourself, Howard, before you take this trade, is this smart business? Is this my setup? Is there a look below and fail here? Right? Is it smart to do business here, or am I just bored? Or am I just pushing it? Ask yourself these questions, right? You've gotten much better now on self-reflection. Keep it up. You know, we as retail traders, the thing is, we don't have a compliance officer. You don't have a head trader. You don't have an owner of a firm. You don't have a risk manager. You don't have 4 people, and excuse my language, you don't have 4 to 5 people up your ass every day checking every decision you make. That's why traders in firms don't blow up, because they've got 3 to 4 people up their ass constantly going, why did you do that? What are you doing? Are you fucking brain dead? Get out of that position right now. Or they'll just take it away from you and close it out without even saying anything, and then they kick your ass off the desk. Right? You don't have that, so you have to self-police yourself. That's why I came up with this method where it's very, very clear. Right? It's very clear. Right? The trade makes business sense or it doesn't make business sense. If you're going long, it's because there's no supply. How do you know that there's no supply? Because bids come in and the offer moves up. Right? The market will tell you if there's buying. Right? You know there's a seller here, here, and here. So if the market starts to offer over these levels, you know their buying is present. If the market starts offering lower, you know buying is running out. Very simple. Right? And you always have to ask yourself, am I doing good business or am I just hoping and wishing and praying? See, Matt, we're not allowed to blow up accounts on the other side. It's just not tolerated, right? It's like, say you had a business. I'm not sure what you do for a living, right? But say in your business, right? I don't know, say you're baking bread. And one day somebody comes, maybe you bake 20 loaves of bread. And usually you sell 18, 19. One day you sell maybe 3. There's no business. There's a snowstorm, right? You're in Calgary. There's a snowstorm. Nobody can get to the bakery. And you're sitting on, are you going to burn down the bakery? No, because you got to do business tomorrow when they clean the snow out, right? So we're not allowed to blow up accounts, right? If you start blowing up accounts, they will take you off the desk right away. If you start making the common errors that retail traders make, first of all, they train you not to. And it's not even talked about. Things like FOMO, tilt, all of that stuff's not even spoken about in professional trading circles because it just has no place in a business. Right? It's like a surgeon going, "Oh, it's slow. Maybe I'll do some. Hey, come here. Let me do some heart surgery on you because I'm bored." Right? Right? So we can't act like that. That's why I try and instill in people. I'm like, listen, this is a business. You got to treat it like a business. Otherwise, you're just going to do nothing but lose money. Right? And we're not allowed to lose money because here's the thing: if you, excuse my language again, if you fuck up, word gets out. Right? Word gets out that you're a loose cannon. Right? And as soon as the word spreads that you cannot be trusted with a firm's capital, your career is over. You're done. As soon as word gets out that you don't know how to manage risk and that you're a cowboy with other people's money, you're gone. You're gone. I wouldn't count on there being a seller at 34.5. We're up at 36 already. See, look. What was your clue, Matt? Look. You see that? That's a clue. You don't need any indicator to know that if you can't fill the bids underneath 31.25, look. Right? Bid. Small, and we'll be talking about this on Thursday. Details. Small details like that will tell you, right? Yeah, there you go, Howard, right? Look how nicely that 36 worked. The seller stepped in there. So what they'll do is, this is a distribution box. Wholesale will, their buyers underneath 33.5. As soon as it gets over 33.75, 34, they flip to the offer. So they're trading this box back and forth, right? But overall, they will sell 2 for every 1 they buy. And that, my friends, is how you make a market. So Matt, right now you should not even be thinking about a trade until it does a look below and fail of 31 and a quarter. That's cool, right? You can see that there's a seller here. Now let's see if we can get down to 31 and a quarter and do a look below and fail. And that's the trade that you'd want to take. Because shorting this is okay. Your stop would be 36, 37. And you'd put bids down here in the 32s. But you got to be quick, right? And that's how you trade a distribution balance. Very good question, Bram. Very good question. What would your reason be for trying to catch that trade? Hindsight. Let's see. So you feel it's going to break 31 and a quarter? It might. Let's see. Here we go. This is good, Matt. This is really good. Watch. There's 31 and a quarter. Can we offer under 31 and a quarter? There's a seller there. That's cool. Let's see. We'll give it some time. We only got 27 seconds left in this candle. Let's see if it holds 31 and a quarter. Next candle opens. Watch the offer. Right? So you buy a few at 32, put some sell orders out at 33 quarter, 33 half, 33 three quarters, and see if you could sell them. Right? Because if nobody wants to buy them, you got to get out of your trade. Right? Long 32, I'll sell 33 and a half all day long. Quarter, you want them at quarter, you got them. Right? I'll take them at 33 if you want them. Right? Take them. Right? The buying's not that strong. Right? Got one contract left offered at 33 half. If they don't take it, I'll move it down to a quarter and I'm gone. Thank you very much. Flat. Right? Not a lot of meat on the bone on that trade, but no sense shorting it. Right? Now, when you lift, your next seller will be here. There you go. Now, wholesale is long underneath 33, right? So they're going to flip to the offer. They're sellers now. If you're not a seller over 33, you should got to be long 32, and you got to sell the 33, 34s. Because if you don't, the rest of them will, and they'll take all your clients. See? That seller has now moved down here. If they see bids, they will raise the offer. Check it out. Next candle opens in 10 seconds. Watch. See? Print. Print. Print, print. There you go. Right? We got to take out this 35 first, Matt. And then you can go print the 36s. Right? There's nothing wrong with candle wax patterns. If you understand the business behind the pattern, it's going to help you a lot more, right? If you understand why the pattern's being created, then you can understand how to trade it. And more importantly, you can understand when the hell to leave it alone, right? So everything we do in our room at Trading Syndicate, folks who are joining us on YouTube, everything we do is practical, right? Everything we do is practical. So, you know, you don't want to overthink this, Matt. There is no double bottom or double top, right? There's a poor low. There is no double top. You see a double top here, but what that means is your balance top, right? So just try and squish down the information that you're looking at and try and go back to like 1912, 1916 pure trading, right? Right? We want to take this and squish it down because remember in the old days, people used to trade off a 15-minute delayed ticker. No candles, no patterns, no nothing. How did they trade? How did they trade with this updating every 15 minutes? None of this crap, right? So that's what we teach you. We teach you old school trading. See you, Jerry. Give me a call, brother. I'm around. Thank you, everyone. Have a wonderful trading day. We will be back at 9:30 a.m. Appreciate you all. And if you're interested, please come and join us at the Trading Syndicate. We have a 3-day check out the room for free. And also we have a raffle going where you can win a one-on-one coaching session with me. Love you guys to come in. Have a wonderful, wonderful day. Thanks, everyone. Bye for now. Oh, here we go. Right. Yeah, be careful on the short side, right? Find your seller before you short. And with that, I will leave you folks. Bye for now.